Hi, welcome to Kneppy Invest. So I can't believe it is week 6 update time for my momentum sentiment portfolio. Time is flying so quick. But anyway, let's get stuck into it. Let's try to be brief. I always try to be brief, but I never am. So what does this portfolio entail? So it's based off a strategy I started using in 2013. So when I first started investing, I was definitely this sort of traditional fundamental type investor. The stuff they try to train you on to tell you that you should hold for the long term, buy a company and then hold it for 10 or so years. So I do still do that strategy, and it's my long-term growth portfolio, but I'm starting to wind that strategy down because when I compare that strategy to this strategy, I definitely like this strategy more. And this strategy uses two signals. So I use a technical signal. So when I first started investing, I never looked at charts, but in this strategy, you do. You look at charts all the time. And what I'm looking for is a change in share price trend. So I just want to get onto a company where the share price has started to move upwards, and then just ride that trend as far as I can, as far as the company allows me to. The other thing I look for is I always, every day, every trading day, I look for news announcements from companies in regards to profit upgrades, earnings upgrades. And when you get a profit or earnings upgrade, that's usually a very bullish sign for the future share price in a company. And when you combine that sort of announcement with a change in share price trend, it's equally bullish. So if I see those two things, I'll buy in almost immediately. Now, this is a portfolio I began in about August 2020, and my first buy was Blue Scope Steel. And the ultimate goal is to double market returns, and I'm actually doing that at the moment. Now, this week was quiet, no acquisitions, and overall, the market itself was very quiet. It didn't go down much. It went down something like 0.3%. And we only had 3 full trading days. The other trading day, Christmas Eve, was only 75% of the usual trading day because they finished trading at about 2:30 p.m. So last week I made 2 trades. I bought Energy One and Gentrack. One of those companies did very well since then, and the other company did not do quite as well. And that company that did very well last week was Energy One. So this is a company I've been following for quite a while, and if I started using this strategy more and more often, I probably would have bought this company a long time ago. It's just the share price keeps going up. It's been quite a liquid. Not a lot of shares have been traded, but they did have a profit upgrade a few weeks ago, and we've just seen the share price go up and up since then. So I've been following it since then. I was trying to be patient, buy on a bit of a dip. Something else they teach or new investors to try to buy on dips. The dip never really happened, and so last Friday, I just went, look, I'll buy half my allotment at the near the close of trading on the Friday, and then I'll buy the other half when the share price inevitably drops, which I thought it would, but it never did. In fact, the share price went up 17% this week, so it went from $5.50 all the way up to $6.43, and it even closed near its high. The high for the week was $6.44. So quite a successful trade, this one. I still give it a B minus simply because I only bought half of my allotment, and I shouldn't say hoping, but if the share price does move back towards $5.50, I think inevitably we're going to see some profit takers. And if the share price does go back to $5.50, I might buy in my full allotment at that point. Gentrack wasn't quite as successful. In fact, I would give this a D plus. I was a little bit too eager buying this. I saw the share price went from about $1.55 all the way down to $1.40. I thought around $1.40 it's going to be a consolidation period, a price of support, and there's going to be a change in share price would go back up. Unfortunately, on Tuesday we saw one shareholder sell out on market, and in a company like Gentrack, that causes damage to the share price. So that's what happened on the Tuesday. Share price went down something like 8% on that day, simply because one shareholder decided to sell out on market. And so anyway, and then the share price has been hovering around $1.31. So overall, bought in at $1.41, share price now $1.31 or so. So overall gain was a loss of 6.7%. They did have one announcement this week, which was a proposed issue of securities that wasn't price sensitive, but it was in regards to performance rights. and I'm hoping, managers do perform to get those performance rights, because some companies issue performance rights for managers who don't perform. So let's hope that doesn't happen with Gentrack, which I am a little bit bullish about Gentrack, because valuation is quite low, even at these prices, and the new CEO in town. So there is potential this company's share price could be quite a bit higher in 3 or 4 years, simply because, there's a lot of room for growth. And we saw the share price as high as something like $7, $8, maybe $9 a few years ago. So let's get into companies I've held for quite a while. Well, I don't know if you call 1 month a while, but anyway, SG Fleet. So this is a sector, in a sector that I'm fairly confident eventually there's going to be some consolidation. And because of that, because we saw a bit of a change in trend, we've definitely seen an uptrend began in about early November. That's when I decided to buy in, because at the start of the uptrend, so I bought in just after the start of the uptrend, and I think there's a good chance we're going to see some consolidation in this industry. There's 10 players within this industry in Australia, and I think that should get down to something like 4. And hopefully SG Fleet is one of the companies that get bought out, because you see an automatic 30%, 40% rise in the share price based off, assumptions that share price would increase based off, if they're getting acquired, the company acquiring them would put in a bid higher than the current share price. Good hope anyway. So I bought in at $2.17, current price is $2.50, overall gain 15%. So I like this sort of uptrend. It's not quick, but 15% gain in 1 month is nothing to sneeze at. That's quite good. That's beating the market return anyway. Next company is Mosaic Brands, company I'm very nervous about, and I think I maybe should have a rule in place within this strategy or portfolio that I shouldn't be nervous about a company. I am definitely nervous about Mosaic Brands. There are a few negative things about this company, and I am concerned that one day they're just going to go into a trading halt because they've gone, I won't say bankrupt, but that they might be under financial stress. And they do something like $1 billion in revenue and have very low profit margins, so not a lot of profit. Their current assets are significantly lower than current liabilities, something by half. So when you have current liabilities double your current assets, that is a concern for me. So I did buy in 80 cents. It was an opportunistic buy at the time. Last week, the share price was 82.5 cents. Share price went as low as 75 cents this week, and that was a big, I was like, oh no, there's bad news coming, but the share price has recovered to 83 cents again. 3.8% return, that's not that bad in a month's time, so I probably could sell out and be happy with 3.8%. I won't be too dissatisfied with that. So this is a company I could sell out at any time. Blue Scope Steel. So this is the initial investment I made within this portfolio. It was based off just a change in trend. Way back in early August, bought in at $12.34. I was a little bit nervous because Blue Scope Steel, I don't think it's the highest quality business, but I did see a bit of a change in trend signal, so I bought in. And since then, they've had 2 earnings upgrades. So it sort of seems like the market knew there's an earnings upgrade would coming, and that's another reason why I'm transitioning to this sort of strategy, because it seems like the market is way smarter than I am, and it sort of sees upgrades and downgrades ahead of time. So it's had 2 upgrades since. The second upgrade, the share price rose to about $18. $18 is a near 10-year high, and the share price is really struggling to get above $18. And I think if it breaks through $18 on really good volume, that would be an extremely bullish sign. And that, in fact, I might even buy more shares in Blue Scope if it does do that. I've also thought about selling out at around $18 because that is a 10-year high. Not only is it a 10-year share price high, it's an all-time market cap high as well. So overall gain 40% is nothing to sneeze at, especially because I've held this for about 4 months. If I get 40% return in my investments over 4 months, I'd be very happy indeed. So the next slide here is just something I've shown you in my previous videos. It's a different time frame, different perspective. It's just showing you, even though the share price has gone from $50 in 2008 to $17 now, because they've increased shares on issue by 3 times, triple, it means that the market cap in 2007, 2008 is exactly the same as the market cap now. So the market cap hasn't changed, the valuation of the company hasn't changed, the share price has gone back a lot just because they've issued so many shares. So it's a different perspective here. That's all. The only reason I'm showing you this. Yeah, but let's get about that $18. Yeah, that would be very bullish just looking at that chart. Yeah. Next company is South 32. So this is a company I bought around the same time as BlueScope Steel, and this was a company I bought in way too early because it was sort of trading in a price range between about $2 and $2.30. So every time I got $2.30, traders would sell out. Every time it got towards $2, traders would buy back in. And then eventually it broke through $2.30 on good volume, just like I'm hoping BlueScope still does. And once it broke through $2.30, the share price just kept on going up. And that's when you should have bought in. That's when I should have bought in, is in that breakout on large volume at $2.30 in the middle of November. So 13% gains since I bought in. Again, that's pretty good. I'm not dissatisfied with that. But South 32 definitely has potential. I think they have copper mines. I'm very bullish on copper at the moment. So I've been thinking of buying Sandfire just based off the copper prices. But maybe that's another video. Anyway. Next company is Costa. I've talked about this, is when you get a price trend change coinciding with a bullish, say, profit upgrade or earnings upgrade. That's a very bullish sign. This wasn't quite a profit upgrade. It was a half-year report where they were very bullish looking forward, management were, and that really set the motions in for a beginning of an uptrend. It would definitely see the beginning of an uptrend around that time. So that was late August. And we've just seen the share price going up and up. Over the last month and a half, we've seen the share price consolidating around $4. In fact, it's been around $4 for quite a while. It seems like every week share price is finishing around $4. This is very healthy. You'd like to see periods of consolidation because if the share price gets above $4.15 on good volume, we'll see the share price continuing to go up. If the share price falls below about $3.80, $3.85, that would be very bearish, and that would be my sell signal. So overall gain 11%, nothing to sneeze out again. I'm happy with the returns on this. And I think there is potential that the share price of this company could be significantly higher over the next few years, especially if conditions for this company remain fairly bullish. But because they're in the agricultural sector, you never know. You never know what's going to happen with droughts. You never know what's going to happen with diseases, destroy crops, that sort of thing. Red River Resources, another company I'm thinking of selling, seems to be trading within a range between 30 and 25 cents over the past month and a half again. But I've made an 18% profit with this company, so I bought in at 22 cents. And it's been hovering around that 25, 26 cents for about a month now. So if it falls below 25 cents, that would be my sell signal. If it goes above 30 cents, that would be a very bullish signal. So I'm keep on just holding until I get a signal either way. If it goes above 30 cents, I might even buy a little bit more. But anyway, that's all on Red River Resources. Empire Energy is another company I'm thinking of selling, especially if it goes below 35 cents. I bought this on a very bullish signal back in middle of October at 36 cents. Current price is 36 cents, so it's just gone sideways since I bought in. And I'd rather see this share price go up. Every time it gets towards about 42.5 cents, the share price retreats. And every time it gets below 35 cents, there's quite a bit of buying, and the share price recovers. So eventually the bears or the bulls are going to win out with Empire Energy. And again, if it goes below about 35 cents permanently, I'll sell out of Empire Energy. Michael Hill. So this is another trade or investment I made based off a positive trading update. I was very patient with Michael Hill. They did the trading update in middle of October. I didn't buy until middle of November, so I waited a month to buy this. But it was a good buy because they in early December they gave another positive trading update, and we've seen the share price fly since then. So the share price is up almost 30% since I bought it, which is not bad. That's just over a month. So 30% gain in just over a month is really good returns. And the share price has the potential to go even further up from here. The only concern I had was low volume, but that was a concern back when I bought it. We've seen some spikes in volume since then, but very bullish with this company right now. So this is my overall update of my portfolio. So the previous week was the one on below, the one on top is my current week. So my overall portfolio went down $8. I lost $8 this well. Technically, I didn't lose $8. The value of my portfolio went $8. There's actually a big difference between losing $8 and the value of your portfolio going $8. So a wide range of good companies' performance this week and bad companies. So the best performing companies were definitely Michael Hill Jewelers and Energy One. So Energy One went up 16%. Michael Hill Jewelers went up almost 15% or so. And quite a few other companies, BlueScope Steel went down, S32 went down, what else went down? SG Fleet went down. So yeah, so a wide range of good company performance and bad company performance. But overall, it still beat the market. That's the main thing. So I've been close to buying SRG for a long time. In fact, I think I might have said last week, I put in a bid at 40 cents and hit 40 cents, I'll buy. In fact, I didn't do that. I just completely forgot about that, which my memory is quite bad. So I might say things sometimes in the video, I completely forget about it. It's a big flaw of mine. And it actually did get to 40 cents. And as soon as I got to 40 cents, I was buying. In fact, there's a massive amount of bids at 40 cents. So 40 cents is a good price to buy, because if it falls below 40 cents, that would be very bearish. So you wouldn't lose much if it falls below that. So again, very close to buying. It seems to be consolidating in this range between 40 cents and 42 cents. So they did have a profit up or market update and revised guidance. So a very bullish reason, or very bullish reason the share price went up. Macca Limited, another company I've been thinking of buying. A very good uptrend here. And over the past week, it's been consolidating around that $1.20 mark or so, or just between $1.20 and say $1.25. I've been thinking if the share price goes to about $1.15, that's when I'd buy it, but it didn't quite get there. So keeping a very close eye on Macca Limited. They had a very bullish announcement last week, which was an acquisition of Downers Mining West business, and I think this could be company making for the business of Macca Limited. So that's all I've got on update week 6 for my momentum sentiment portfolio. Never know where I'm going to make an acquisition, so I'm going to do another update next week, another short week of trading. I hate this time of year because you don't get full weeks of trading. I really hate that. I think they should be trading every single day, including weekends, but that's just me. In fact, I would like them to trade 365/7 if they could. Anyway, that's enough. That's all I've got to say on this video. If you have any comments, leave in the comments section. And again, I only do these videos for my for entertainment. Was it entertainment, research, and other stuff? I'm not an advisor, so I'm not doing this for advice, to give you advice. Maybe I'm just doing this video to give you ideas. I'll say that from now on. Anyway, that's all for this day. Happy Boxing Day, Happy New Year if I don't talk to you since then, but I will most definitely, I'll definitely do a few more videos since then. So see you later, bye.